Hello once again, I'm brschultz. Thank you for joining me. We have seen the model do quite an astounding job in 2024 so far. We saw the SP500 USD on tradingview.com. We saw that the futures hit their macro peak right around the Super Bowl, and that's what the model was originally forecasting, is that we would see the macro peak for the year fall just before the Super Bowl. So from a macro perspective, the model has been doing a phenomenal job. And then the next call was for a major bottom on February 23rd, roughly. So that's what we're looking for in the near future. The model also called for a peak in markets at the end of day February 15th, or maybe even early on February 16th. The model got that spot on as well. So the model continues to shoot at an extremely high accuracy. I would give the call of February 6th peak plus or minus one business day a rating of about 97.5 or 98% accurate, with the SPX500 USD achieving about 5,002 versus the all-time high value of roughly 5,048, I believe. So it was off by 0.5% from calling the all-time high, which is what the model was projecting would happen for 2024, that the macro peak would set in right around the Super Bowl timeframe. If you missed it, if you want to go back and review all the forecasts since early January, you certainly can. Basically, I set out this year to prove or to test to see if my macro models truly were refined, honed in, and had the extreme ability to be extremely competitive in the market timing space. There's not very many people in the market timing space, and then even fewer that can keep the same forecast week after week after week. Extremely few of those, right? So I consider myself one of the few online that can tell the most boring story and still have lots and lots and lots of viewers. And I say that because I repeat myself every week, hopefully, right? Keep my story very consistent about which days I believe the peaks are going to fall and the bottoms. And then over time, hopefully the markets play out precisely as forecasted. So I would say that the call for a peak on end of day February 15th, early 16th was 100% of 100%. A bullseye within a bullseye. It was extremely precise. And yeah, so we have 341 weeks until the Great Depression kicks off. I believe that will start around Labor Day of the year 2030. That will be a hyper peak in markets. So essentially, you'd see markets climb and climb and climb into late 2030 and then collapse for the first 5 years of 2031 through 2035. I think we'll see the Great Depression end around October 2035. So as you watch my videos, hopefully you are amazed and astounded at how accurate these models are. These models are built in Excel. They're not a canned product. They are created by myself and only by myself. I don't have any help. I started back in 2009, I think, trying to build models. And so this is a culmination of years and years and years of hard work. So hopefully you're enjoying it. Hopefully you can't find anything quite like it on the internet as far as accuracy is concerned. And then obviously I hope I'm not correct about the Great Depression that's coming, but the models seem to suggest it's very likely. So that is just less than 7 years away. So let's start with the videos for this week, or let's start off with the presentation slides for this week. Thank you for joining me. If you like my work, please feel free to text or forward or share my videos online. I'd very much appreciate it. Obviously, being a very small market timer on YouTube, the best way for growth of my channel is through viewers like yourself, sharing my work and sharing it with friends, families, foes, and market junkies, stock market junkies. So thank you so much for joining me. Okay, so this hasn't been updated, but essentially 341 weeks until what I'm considering to be the macro peak in markets, kind of a 30-year macro peak. So when markets peaked in 2000, late 2000, around Labor Day of 2000, I believe, we should see the same effect roughly in late 2030. I believe that's where you'll see a large drop in jobs. The middle class will be greatly reduced, as every one of these major collapses in markets usually produces is less and less jobs, higher paying jobs. So I believe that the middle class will be maybe cut by a third of its size from 2031 through 2035. I think there will be great times of poverty and want. And so I think that the times ahead will be very challenging from 2031 through 2035. That's my forecast. But until then, I think you'll see markets stay pretty strong and hit some type of hyper pitched peak in late 2030. So this is one of my original models for peaks. It needs 3 touch points essentially to call out or forecast a major turning point in the future. So you can see from 1978, 1986, 87, and then a peak in the black wave in 1999. You got 3 touch points. That touched the black horizontal line, and that created a huge shift in pricing from Labor Day of 2000, where markets peaked and then collapsed, into early 2003. And then it had a similar situation where you had a bottom in the black wave in 1978, and then a double bottom in the black wave in 94, 95, 96. That created the touch point on the black horizontal at the top in late 2007, and then the markets collapsed in late 2008 and early 2009. Each one of these has led to a great reduction in the middle class, and so I believe that, as you can kind of see going into the future, that you have the 3 very, very clear 3 touch points on the black wave going out to Labor Day of 2030. And so I believe that the markets will be in a Great Depression mode from 2031 through late 2035. And I think you'll see a 1/3 reduction in the middle class, most likely. As technology gets more and more advanced, I think the middle class will shrink. So I think it's inverse relationship. And so I think the worst time for the middle class will be, and for economy and for the masses, will be from 2031 through 2035. A double bottom in markets in late 2037, then that kicks off again another 30 or 50 year cycle. So I think that's why there's so much emphasis in politics and in different initiatives in the political realm for 2030, because essentially you're having a Y2K plus 30 for a macro peak in market. So so I think that's what this is all building up to in the future. Again, if you enjoy my work, please pass my work on to others. Help me grow my channel through word of mouth. That would be greatly appreciated. Thank you so much. This is the original MJ23 wave that I've used to predict major turning points in markets. Essentially, I wanted to show you a backtest of 1929. And again, my model uses 3 touch points and then goes up to the black trend line, or black horizontal line. And so just from after point 3 was formed in 1925, 1926, the model was preset, if you will, to hit a hyper peak in late 29 and then collapse into 1932. So this is kind of how markets, in my understanding of them, collapse, how they form peaks in the future, how forecasts are made, things of that nature, at least from a sine wave perspective. And if you enjoy my work and want to donate, I leave little QR code tiles on each one of my slides hidden in the date field. If you should want to donate to my work and say thanks in any way, or throw me a beer, throw me $5 for beer, $10 for beer, or Gatorade. Always greatly appreciate it. Let's keep moving. And so you can either use the PayPal QR code here or the Venmo QR code. There's also a PayPal gifting link below the video in the description. So after a long road of trying to finesse the long-term purple wave and find out how to make it accurate and sync with markets in their future hyper peaks and things of that nature, like 1929, the slide you just saw, essentially using that same algorithm, predicting and projecting that there would be a major peak around Labor Day of 2030. So that's how I get to the Labor Day 2030 as the hyper peak in markets, and then leading to a Great Depression. So I think the second slide that you saw, as well as this slide, really do a great job of telling the storyline that I advocate of having a hyper peak in markets around Labor Day 2030. So I think they lay out a very strong and clear case for my thesis and forecast for a major market peak in late 2030, and then obviously leading and allowing for a Great Depression to ensue. So hopefully these two graphs really do a good job of driving home the point for the viewer. And this is just another view of that. So the black horizontal lines usually are very helpful. If a trend goes to the zero horizontal, which you're seeing in the yellow trend line, that often can also lead to a collapse in markets. So I utilize the black trend lines extensively. You can even see the bottom in the purple waves in 2014-15 and 18-19. Kind of, if you were projected to the lower black horizontal, you might even argue that that went to the end of 2021, which would be a macro peak in markets, and markets collapsed in 2022. So they are very instrumental in understanding the balance of pricing into the future and how they support markets long term. This is one of the original slides that I used in my previous weekend forecasts, and essentially I like using some of these similar ones. I don't include all the ones from previous forecasts, but some of the macro ones I will, because I think it just drives home the point how consistent they are. They tell the story, and obviously when it's a monthly model like this, it only changes when new monthly data is introduced. So I think this is still from January, but you can see how it was predicting a peak in around the Super Bowl of 2024. Yeah. So I tend to like these models, and it helps me kind of feel more comfortable, and I feel consistent in my forecast when I can pull multiple models like this together that all tell the same story. And so this is the S&P daily 5-minute model. Essentially showed how the model was synced for the peak in markets around Thanksgiving of 2021. And then the lower green trajectory showed how markets bottomed around mid-October 2022. So with those 2 points, essentially you understood the entire cycle, right? So that was pretty astounding. And then in the next slide, I'll show you the current status. So essentially this is one of the original slides that I think was in one of my first videos, essentially showcasing how many touch points were leading up to roughly the pre-Super Bowl of 2024, and this is why I believe that the major peak in markets would fall right around the Super Bowl, pre-Super Bowl, and the previous slide also showcases why such a theory held true in late 2021, and we went slightly higher in 2021 in markets, but as you know, then we collapsed into late 2022, and so the next slide in the presentation here will now show you where the bottom in the market is expected to fall on the macro scale. So essentially, if the macro peak would fall right around pre-Super Bowl of 2024, which I believe that we've seen it now, although I have stated that March 7th could be a retest of the all-time highs, or maybe even a little bit higher. It's possible, right? Because in 2021, markets went a little bit higher into early 2022. And so it's possible that the March 7th high in markets could be slightly higher than the peaks that we saw in SP500 USD and TradingView.com for the futures for the S&P 500. Again, that would fall around March 6th or 7th, I believe, if my forecast is correct. And then you can see the bright blue diagonal line leading out into roughly mid-October of 2024. So again, you would see the macro peak occur right now, right? Because today is February 17th, and so we've surpassed this date in the original slide, which that's why I enjoyed doing these weekly updates, because the models don't really change, right? My predictions don't really change, and so far this year the predictions have been highly accurate. They've hit very close to the predictions that have been stated, and the next one up obviously is February 23rd for the next low in markets. So that'll be fun to watch play out. It'll be this upcoming week, so I'm excited about watching that. But yeah, the prediction accuracy has been extremely high this year. I'm trying to showcase that my models can comprehend and understand macro turning points in markets. In 2022, quite a few viewers saw the model's ability to understand the micro. I think the model got like 55 out of 57 calls correct in the year of 2022. So it was an astounding year of accuracy for short-term calls. Next slide we go. So I've removed quite a few slides, but one slide I do think that is valuable to keep showing is the purple wave for the 2-hour model, and that essentially ties out with the previous slide, right, of the mid-October 2024 major low in markets. So that'd be your 3 touch points, right? You have 1, 2, 3, and then again, this ties out with the same projection you saw on the previous slide of the mid 2024 October bottom in markets. So this ties out with that. And this is a 4-hour zigzag, and essentially this is showing the same thing. So I have 3 graphs in a row for you, trying to underscore and underline the forecast for a major bottom in markets, going right around into the election time frame, and then the markets would blast higher. And again, then we would be on our path up to the late 2030 macro hyper peak in markets, leading up to the Great Depression. Okay, so the next event that's on this forecast model, as you've seen, this is one of my more favorite models to look at, is the bottom roughly around the 22nd. So the official date will be the 23rd for the low in markets, plus or minus 1 business day for the macro prediction. And again, if you want to look back at my early January videos, I was predicting that would occur as well. So I predicted that almost 45 days ago, around roughly. And so you can hopefully be blown away about how consistent my predictions are, about the foresight the model has, and the ability using 1, 2, 3 touch points in different various models that I've built predict the future events and pricing action of markets. I think it's astounding. I think it's unparalleled in the market timing industry. I think there's a lot of models and tools that are real time, right? They use real time KPIs or metrics or indicators to understand where the markets are at. But I think there's few that actually have forecasting capabilities. So I think that's where my model stands apart. And then after the February 23rd official bottom date, I think then we'll go up into roughly March 6th or 7th for a peak. And so I guess it's March 6th or 7th plus or minus 1 business day. So I guess it gives me like a 4-day window. But you can go back to early January, and you can see from my first videos that the model was projecting there'd be a major peak in markets around March 6th or 7th or 5th, somewhere around there. So if you want to go back and look at those videos, you can see that my forecast has not changed. So you can see that the emphasis of my models here has been stressing mostly the points in the future. I have a few graphs, yes, that still point out the macro peak in markets around the Super Bowl, but I've removed most of those graphs on a shorter time frame. But the reason why I kept this graph in is also it kind of draws out the roughly February 23rd official bottom date, plus or minus 1 business day for the forecasted low in markets, and then and then we'd go up sideways or higher into March 6th, 7th peak. And then, as you might be able to tell, this is a weekly model based on the legend, and it has 3 touch points, basically calling out major peak in markets. It's roughly estimated right around sometime in February, because each one of these points in the graph has the dates listed about 3 to 4 months apart. So it's very condensed in the time frame. So this aligned obviously with roughly the Super Bowl peak in markets. But yeah, a lot of really nice 1, 2, 3 touch points, just showcasing the model's ability to pick out macro peaks in the market, such as September of 2018, such as January of 2020, such as the very end of 2021, and even August of 2022. So it's calling out a major peak in markets roughly around the Super Bowl of 2024, which we have seen hold so far. Again, if you look at SP500 USD is what I go by for my official timing. That's what I look at. That's what I watch for calling all-time highs, things of that nature. And then zooming in, I just wanted to show users how this is like leg 1, 2, and 3. The start of 3 should be very soon, so that's why some people think that the downdraft could be extreme into February 23rd. Because if wave 3 is to truly be a wave 3, you'd see a lot of power behind it, and so a collapse in markets would ensue into that February 23rd time frame. It'd be a very short window for a collapse, right? But I guess there'd be maximum carnage over this next coming week in week 8 of 2024 if this truly was a wave 3. Now, if markets do break down and over time into late March low, right, as the title of the video shows, this would basically suggest that the peak in markets was around the Super Bowl, and that we don't make a higher high in early March, right? We don't even retest the highs, because if this thing starts breaking down on a massive scale, essentially the March 6th, 7th official peak would be a lower high, right? So it really depends on how bad this next week is. If the graph can maintain its strength into the March 6th, 7th peak, or not. So that's what everyone will be watching. But I really think this model is really cool because very few graphs and technical indicators, I think, have such jagged points that are so precise in predicting the future. I think that's one of the competitive advantages of this model. This is one of my original black wave models for peaks for macro, calling macro peaks. But essentially the green wave, I found, did a really good job of predicting where market peaks were as well. So you can see the 1, 2 touch point into end of 2021, and you can see the same touch points. You can actually see a 3 touch point into roughly the Super Bowl of 2024. Why do I say 3 touch points? Because the green wave over August and September of 2021 kind of flattens out, and so that yields kind of a 1, 2, 3 touch point. So I think that's pretty sweet. And again, that time's passed, right? And so far that peak is held in the markets for SP500 USD as the all-time high for markets, for the S&P 500, obviously. And then this is just the daily model that I've used for some time now. Essentially, you're seeing a peak. It called out a peak around pre-Super Bowl. We saw that hit, and then obviously you can see where it's calling the March 6th, 7th, based on that yellow trend line trajectory with the 3 touch points. And again, it needs 3 touch points. And so it called out end of 2021. It called out early April 2022. April or August of 2022 was macro peaks, and so it's really called out some significant peaks in the markets, right? And so you can see how the model is calling out for these macro peaks, both around the Super Bowl and then in very early March. And then this is the zoomed in version, so you can really see those 3 touch points for roughly the pre-Super Bowl, and then you can see the 3 touch points again for roughly March 6th or 7th. Again, you need the 3 touch points in the model for it to work. Again, if you haven't subscribed, please consider it. Please share my work. Please, copy the link and send it in a text message to friends, family, other people that really enjoy following markets. Hopefully, you can't find anything else like this on the internet or on YouTube as far as highly accurate predictions about the stock market. This is the 4-hour model. Essentially has the 3 touch points for the end of July. Also has 3 touch points for that March 6th, 7th type of peak. And then end of December, it also had 3 or 4 touch points. So this is more of a confirmation model. It's not one of my prime models. I have to use an algorithm that I've built essentially to create this version. So again, I only use it really for confirmations. I don't really use it for super hyper accurate forecasting. So it's just nice to have the confirmation. This is my 60-minute weekly, and I think the beauty of this really is showcased by predicting that March 6th, 7th peak. Again, this is a weekly model, so it only has weekly data in it, and weeks are only the Monday of the start of the week is the date that you would get out of the data set. So I think March 4th would be the date of that Monday. So the 6th and 7th would be like Wednesday, Thursday-ish. So again, these dates would only be the Monday of the week. But you can see the nice 1, 2, 3 touch point going in for a major peak right around there. And again, this is just to showcase the model's ability to call the peaks. Called around the Super Bowl, right? The Super Bowl peak should be pushed out just a little bit, as I've stated in previous videos, but it called out the end of December and also calling for that roughly March 6th, 7th macro peak. And this is finally current day, right? So you will recognize this model, I believe, from the short video that I just made this last week. I think I made it on February 13th, right when the market sold off. And I was already predicting that there would be strength into the end of day 15th, early 16th. And if you want to go back and watch that 3-minute video, you certainly can. But that's just how fine-tuned this algorithm is. I think sometimes the hard part is for people to see how accurate these models truly are until time passes, right? So the model called out a major peak in markets around late 15th, early 16th of February. Then we saw markets collapse, so that was great to see that. And you can see the clear 1, 2, 3, 4, roughly that March 6th, 7th time frame. So that would be the next peak in the markets after the, I believe, the Feb 23rd official low. And it didn't look like markets wanted to really break, did it? At the end of day, February 15th, and even on the 16th, we had a very strong retrace. So that call looked like it was going to be in jeopardy, and then all of a sudden markets collapsed at the very end of day. So spot on with the call. And then, yeah, you can see how the model has a very clear call for a peak on March 6th, 7th. So I'm very much looking forward to that as well. And this is just a different way of looking at it. You can see how once it was synced, you can see how it called out these 3 peaks. The end of January, mid-February, and that March 6th, 7th peak in markets. As you might expect, I have to try to fine-tune models time to time to try to get them to sync better with the market's behavior. So I took the 1-minute model, I think it was one of my previous weekend videos, and I used to draw this up to a much higher level. And so I've tried to understand if I can better forecast market behavior by altering the algo a little bit and then only drawing it up to the plus 100 or top of the graph. I think in previous videos I drew all the way up to 150 on the 150th horizontal, put the top of the graph in the normal settings is plus 100. So this is drawn up to the plus 100. And then you, as you can tell, it has 3 touch points. And then that projects that there would be a major peak in the markets around 9th to 12th. So that would be the best sync, right? So I had to fidget with that after, obviously, the peak came in. So that's why you'll see this slightly different than previous videos. Okay, so if you haven't donated and you feel like that's something you want to do, or you think my work is pretty sweet and some of the best you're going to find on the internet, and want to pat me on the back or send a cigar my way or beer, you can scan the QR code there in the date range. But I think this model is pretty sweet because essentially I saw this before I made the 3-minute video this last week for the February 15th, 16th peak in the 10-minute model. I saw this in the 5-minute model. I thought it was pretty amazing that the two aligned. And so yeah, so I'm very glad that the crash happened as predicted. And then you can see that there's some type of peak that the models are projecting out to the 27th, 28th. And once the market holiday goes by, then the date will punch out to the 28th. So it looks like we're going to have market strength into the very end of February once markets bottom. So I think this is one of the models I showed on previous weekend editions. You have your 3 touch points walking out to roughly February 22nd, which will become February 23rd for a major bottom in markets. And then you can see the 3 touch points on the right side of the graph too. So you have 2 trends going out roughly to calling a major bottom in markets on roughly February 23rd, plus or minus 1 business day for the official call. So again, this call has been made weeks and weeks before this would ever take place. You can even go back, I think, to the original videos, my first video for 2024, calling for some type of low in markets around February 23rd-ish, 22nd-ish. So it's quite astounding, right, that even though the calls are made so far in advance, that they can play out so tightly to the original prediction. So I think that's where you're going to be very hard-pressed to find that elsewhere, anywhere on YouTube or any financial forecasting report. This was one of the original models I think I used in previous weeks, so you can see the green wave even projects that there should be a major bottom in markets right around the 23rd. This is the 90-minute zigzag model, and it also projects that there should be some type of bottom, again, right around February 23rd. This is one of those models that goes out to the plus 150, the 150 horizontal SH peak model. So essentially it's also calling for some type of peak in SH, the shorts, around February 23rd. This is the 2-day zigzag model, and I thought this is pretty sweet. For the 3 touch points, it predicted the early October 2022 bottom, the early January 2023 bottom, and it's calling for a bottom in around that February 2024. So I don't know how strong the drop will be, but it's clearly marked and defined by the yellow numbers there. So I thought that was pretty sweet. I think that's also what's great about the having the models built by myself. I can do different things, right? I can put 2 days data in each slot instead of 1 day's data, right? So I can take the high and the low of over 2 days, and the open of the first day and the close of the second day to make a different type of data point, where some of these canned reports aren't able to do that. So that's what I enjoy about working with my own models. So again, projecting some type of major bottom, it said around February 23rd. And then this is just showing you the one-day version of that. So you have the 3 touch points on the green wave, or the green trend line, I should say, going out to roughly, again, the Fed date in late March. And then, interestingly enough, you have the bottom. I think this is one of the first models I used to call the bottom around February 22nd, 23rd. And interestingly enough, right, inflation is still running hot, right? So that's what's supposedly going to crash markets. So this is all stated in early to mid-February, right, about inflation running hot. And yet all the predictions that the model made were in early January. So there's no way that the model would have known anything about what they were going to report. So that's why these models are so amazing. And then this daily zigzag model is just to showcase the bottom on markets around February 23rd. And this graph is from the original 30-minute model. I think I presented in previous videos about projecting that there'd be a major bottom, market bottom in around late March as well. And this is just a different way of looking at it. You really only need 2 touch points when you are speaking about the trends to the lower black horizontal line for the resets. And essentially, it's able to identify the lows in the future for the markets based on the presets. And please ignore that red, the red arrow. And this is the daily zigzag, basically showcasing that it predicts major lows in markets on a 25-point basis, not a 50-point basis, as you've seen in the separation of the black horizontal lines in previous charts. This is 25 points of separation, and essentially 2 touch points out to the Fed date. So we should see a major bottom in markets around the Fed date in late March. So I took the previous graph that you just saw, and I blew up the 25 separation so that black horizontal line is actually 12.5 in this graph. And so the very top of the graph would be your 25 point separation, and the black horizontal line that has all those little whiskers is essentially your negative 100. So I tried to zoom in on the previous graph essentially that you saw, and it's just calling out that there's major bottom at the end of October of 2023 and then late March 2024. So I think that's where the resets are at. This was my original way of market timing, was the gold wave. So I took tried to take averages of the zigzag and then find the 3 touch points within the gold wave. Believe it or not, you think it'd be a lot easier the way I'm doing it now, but the gold wave actually is pretty amazing because it usually finds the biggest drawdowns in the market. So it's actually predicting that the lowest point for the drawdowns will occur in mid-late March. So that would also state that that would be the major bottom in markets. This is a 2-hour model. Essentially, you can see how when it's properly aligned, it picks out the major bottoms in markets. So you can also see that this is calling out a major bottom near the end of March. You can see that it called out a major bottom in October 2023, in October 2022, and late June 2022. And if you've enjoyed today's presentation and are enjoying the accuracy of the model and are blown away by it, you don't need to rewind the whole video to go back and find the QR codes. Here they are. Thank you for joining me today. If you've never subscribed, please do. Please share my work with others as always. And then if you've never donated and want to buy me a beer or a cigar or a new Michael Jordan pair of shoes or what have you, please feel free to use the donation QR codes or the PayPal link in the description below the video. And thank you for joining me this week. This is my last graph of the weekly zigzag, projecting that there'd be a major peak in markets in late March 2024. Until next time, thank you so much for watching my series. And again, help me grow my channel. It means a lot to me. And then like I said, as my accuracy grows and donations grow with my accuracy, hopefully, I will try to keep a tally. I think I'm still around about $100 right now for $150 for my donations so far. So if you want to, please feel free to add to that. I try to make my videos exciting, very informative, highly accurate. Hopefully, it's some of the best market timing that you can find in the web, based on forecasting, not based on emotion, not based on markets being open. But I try to always film my videos when markets are closed. For instance, today is the middle of Saturday, February 17th, and so obviously markets are not open. So hopefully that gives me a more clear, non-emotional basis for my predictions, and hopefully you're enjoying that. So thank you so much for watching. Until next time, I'm brschultz. Take care.